Welcome to the 5-Minute Trading Edge brought to you by the Institutional Edge System. How many times have you started your trading day trying to find areas of support and resistance as a way to locate potential entries? And if a lot of us look at our charts, yeah, for sure, the high and the low points are easy to spot. And even maybe some of these intermediate areas of support and resistance are also easy to pick up on. But the closer we get to the center of our chart, it's harder to understand, especially where price is consolidated, what's going on and where we might find potential opportunities or where we'd want to steer clear of. Well, today we're going to look at an easy way for us to locate the beginnings of trade entries and how we can analyze them. It starts with volume rejection. Now, volume rejection, if we have the right time frame, is great because prior rejection points towards future rejection. If it's happened in the past at a particular price point, we can expect it to happen again in the future. Now, we can spot these using the volume composite, and it will give us the valuable bounce and reverse points that we would use as a start for locating a possible trade. Now again, our time frame is 300 days, and then we work our way in, but it's a long-term macro look at the market. Now this starts with understanding the relationship between volume and value. And we point this out as a love-hate relationship that you have to keep an eye on, but the market shows its attitude towards value by increasing or decreasing volume. Where volume has picked up, you can see a lot of appetite. Where volume dies down, you can see less appetite. Price is really just a way of keeping score, telling you where you're at. And once you understand and are able to spot volume positions, we understand then where support, resistance, and potential reversals might take place. So let's take a look at this. This is an ES, it's on a 240-minute chart. We've got our volume composite up, and right there we can see a lot of what we'd be hoping to find out in a market where things are moving along. So we can see that the better majority of the volume has taken place right in this range right there, which is important for us. It's dipped off up here, it's dipped off down here, and then we have a lot of activity here in the middle. Now also included in this are our value areas. Value area, the middle portion that we just talked about, that's where 70% of the volume is taking place. Above that, we have value area high, overbought conditions, value area low, oversold conditions. This is where price gets expensive. This is where price gets cheap, and the market responds accordingly. Smack dab in the middle is a point of control. This is where we find the most volume at a particular price point. Here's what it looks like. So there's value area high, VAH. Here is value area low, VAL. Here is our point of control, POC, where the most volume have gone on. Now, why is value area low all the way down here at the bottom? Well, this is a 300 plus day look back. So this is going to include everything that's gone on. This middle zone here over the course of the past 300 days, this is where we've seen the better majority of the volume. Well, what are we looking for? We're looking for prior rejection, and ideally rejection levels that are outside the value zone, outside this spot right here. If we're able to find that, we know what we should go into. We also know what we should steer clear of. Now here's our same chart, but this is with the volume composite blown up. And you can spot this here as we look. There are valleys that we're looking for. Look at them as reverse C's or valleys, excuse me. This is where volume has dropped off. These represent low volume nodes. If we were to go in and take a larger look, again 240-minute look, what we would be doing is we would be picking out spots where volume has dipped off, and you can make them out. Look, they have these indentations there. And as you line these up, you'd be able to find and plot them across with support and resistance. That line wasn't the best, but you'll find that they coincide with support and resistance. You can literally mark these right on your chart to start your day. Working your way through these and then plotting them takes but minutes. Each of these instances in here. Here's what it looks like when it's all said and done. Is this valuable information to know? Absolutely. So here's a chart with all your volume rejection levels put on it. And notice how price honors these as we go through. Each one of these lines, valuable information in understanding what would happen with price. And as we see it, price comes down and touches these and backs off. Almost without fail, as we go through these, each one of these are honored. Great way to find trade locations, great way to spot when price will back away in the form of a reversal. So volume rejection levels, start with the 300-day, look back and work your way in. Use it to locate those reversal points, and again, this is the start of your trade location process. And then finally, if you start your day plotting, checking for VRLs, you'll be ready then to work your way in for those micro opportunities. If you'd like to learn more about how you can profit from volume rejection levels, check out the 4-part training at institutionaledgesystem.com. It's totally free. Lots of ideas jam-packed just like this one. Thanks for joining.